Improvise, adapt, overcome. This is an official, uh, I guess, slogan is maybe the best way to put it, um, that the Marines use. It was made popular in the civilian world in that movie that Clint Eastwood did, called Heartbreak Ridge. But I'd heard it before that, from my roommate in college. He was a um, Marine reservist, and he would use that phrase a lot, and it was kind of catchy, but I didn't really understand what it meant. But now, getting into trading, I started to see, hey, this is basically what we need to do. Once you've built your foundation and once you've put your house together, your trading house together, to where you can withstand a lot of the storms that come your way, at that point, you should be able to improvise and adapt your trading strategy to multiple market conditions. We all know that we go through periods where our strategy doesn't work. It may be a week, it may be 2 weeks, to where it's just frustrating because we don't know how to adapt. We don't know how to improvise or adapt so that we can overcome the situation that we're in. And this is one of the main goals of the first 90 days of trading program. Not just to get you to be able to execute consistently on a daily basis, but if you are part of the program and you remember the top of that triangle or top of the pyramid, it's all about rinse and repeat. And just below that, it's about improvising and adapting to changing markets. And it's very, very important to, if you're going to be a successful day trader, you're going to have to learn how to improvise, adapt, and overcome. And this doesn't mean make wholesale changes to your strategy or change your strategy altogether. You make subtle adjustments based on what the market is doing, and you stay close to home, because once the market gets back to where it normally is, if you're so far out in left field, you'll never get back. And it will be a constant, frustrating process in trading until the day you quit, or it breaks you. And so I'm going to do a segment tomorrow, either Rolling with Ed or Chilling with Ed. I'm going to do a segment on this and, kind of give you some pointers as to, how you can start to improvise, adapt, and overcome. If you're in my the first 90 days of trading, the mentoring program, this is a big part of what I'm going to teach you over that course. Okay, so you don't have to worry about that. But I will introduce some concepts to everybody tomorrow, so stay tuned for that. So the reason why I brought this up is because I've been getting some questions about how I'm adapting to the changing markets with my earnings trades. Because obviously they're not working the way they did last year, even last quarter to a certain extent. But one of the adaptations that I made, one of the things I did to adapt to this market that we're dealing with now, was try and work off of a shorter time frame as far as the entry trigger. Now I still manage it off the 5-minute chart, but use the 1 or the 2-minute as an entry trigger. Well, I tried using the 1, it was way too volatile still. and it didn't work out as well. It wasn't as consistent as I needed it to be. So I went to the 2 minute, and the 2 minute seemed to be more consistent, but also in a lot of cases, the 2 minute and the 5 minute high and low pretty much was the same thing. But it going by the 2 minute, it does allow me to get in trades a little bit quicker, take profit a little bit quicker, and then sit back and see, are we going to break the high or the low so that we could get, more of a move. So in this case, this is where, I've adapted. This is the 2 minute right here. In this case, the 2 minute low and the 5 minute low were pretty far apart. But I got in off the 2 minute low. I could not short into red to green or green to red because we're going red. We're going under yesterday's close price. So once we cleared that, I was able to get short. First target was 60, but really before I could put my target in, it had already washed out pretty much. So I actually got a little bit better, cover on this, which was nice. But it dipped down, missed by about 50 cents. 57.50 was my next target, but it didn't even give me time to react to 58 because I would have taken some profit here if it would have given me enough time to do it. But it just kind of rocketed back up, opened up, pulled back, and then it shot back up, stopped me out at break even. And so it started to recover. And so once we broke over the 2 minute high on this, I had to wait until we got over the linear regression channel, and I jumped in, and of course it immediately pulled back. And that's one thing that we have to understand. Most of the time when we're buying the break, especially the initial break, you're going to get a pullback. Or if you short the initial break, you're going to get a bounce. There will be profit taking. You can't avoid that. It's going to happen. You just have to be patient, trust the technical setup, be able to read the candlesticks and let it tell you the story. So if right now it's easy to see this is a bullish pattern. But can you identify this as it's happening? Meaning, let's do this. Bear with me. All right, so now, what if we see this? Does this look like a bullish pattern yet? No, it doesn't. So how do we determine, or how do we read these things? We have to read each individual candlestick as it prints, and then we start putting the story together. The market's going to tell us a story. Here, this candlestick, this is a base. A lot of people call this a spinning top. You've got a big wick to the top, big wick to the bottom, small body. This is an indecision candle. It means people don't know what the hell they want to do. So we have buyers and sellers basically even fight. Here, this is a nice bearish candle. This is showing that the bears actually seize control toward the end of this 5-minute candle. Because this opened, this traded up, it got stuffed here again at this resistance, pulled back, and it actually held, the bulls held it right here on the 65, 66 level. So if you haven't learned to respect the support and resistance levels, this is a daily pivot. Obviously, you can see where it rejected here. It held as resistance. It held as support all through here. Strong daily level. You can't deny it. Linear regression channel. Strong. What I've seen after market is an increase in algorithmic trading using the linear regression channel. Before, we used to see it intraday a lot. Now we see it after market a lot. My mentor actually has a couple that runs pre-market and after-market using the linear regression channel. So we're going to start to see more of this around the linear regression channels in the morning and on earnings, when we normally see the volatility and the momentum drive it through these. But that's something that we're seeing. So look, next candle, what is it telling you? You know, this is the weakest of all of the green candles, of all of the bullish candles. Here, it opened here, it went all the way up, and then it pulled back a little more than halfway. So we're still having trouble pushing up, but the bulls are still holding this level. That's what this is telling me. This isn't telling me, oh, get out of it. It's telling me the bulls are still working. Okay, next candle. Look at this. This is a flip, the opposite of this candle. This is a strong bullish candle. This is telling us the bulls at the end of this 5-minute candle seized control. Because here we opened, we sold off, got bought up off this level, and we closed near the top. Next candle. This candle ran up, rejected the resistance here, sold off. But guess what? The bulls still held this level again. There's nothing telling me to get out of this trade. Absolutely nothing. It's just kind of chopping around in between these levels. You could say the algos have it. You could say, you know, some type of automated trading system that's firing off these two levels. You know, who knows? There's no way to know for sure. But we know what it looks like when buyers and sellers are fighting each other in a tight channel. That's what we see. But it's holding support. Resistance is doing its job. So we just have to wait. Keep waiting until this starts telling us a story. Here again, we've got a nice bullish candle here. So we're going bullish, bearish, but we're holding support. We're holding resistance. Again, here's an indecision candle. No, this thing practically opened and closed at the same price. Then bam, look at this. What is this telling us? We've got a strong bullish candle. This is the strongest of all bullish candles. Okay, so this whole thing is telling us, if we look at this as it's working, we're zoomed out watching this. After about the third or fourth candle, we're seeing this as bullish. We're holding support. We're holding support. Every time we come back, the bulls are holding it. So, this is the move that we're likely to see. And here again, this is kind of running out of steam here. We just made a break. We got profit taking. We got people that bought looking for the break at a high day or the high of pre-market or aftermarket. So again, we get a pullback. This thing gets bought up. The bulls buy it up. Back off the support. Next candle, wham, right to my target. Nothing in this told me to get out of this trade. So I know this took a little bit longer, but I wanted to explain to you what we do. This is why I teach you the candlestick formation first, what each candlestick is telling you. Once you know that, you can put these together as they're forming. It's going to tell you a very compelling story, and that's going to tell you whether to stay in or not. So in this case, we got the move down. It stopped us out. Here we got in on the break. This kept telling us we're not done yet. We're not done yet. So we did hit our first target. We got a little pullback, and you can see all through the rest of aftermarket, this level held. This level held as support. So why not leave the 200 shares I've got on overnight? This is the next thing that I did to adapt. Now, you don't have to do this. You can take the initial move and take it off. If you're in CMEG, you've got to be out by 5:30 anyway. So I would not suggest doing this if you're in CMEG, just closing at 5:30. But if you're in IB or TD and you can trade till 8 o'clock, you can come back at 8, and kind of look at, figure out, hey, is this thing holding support? Yeah, let's hold it, and we may get a gap up overnight. If we don't, we get out of it if it's losing support. But this is another one of the ways that I've adapted my earnings trades. But but the point is, you can still make money and not hold it overnight. I could still have taken this off and just, this probably would have been around break even. Still could have just taken this off, and I would have locked in this profit and then this profit and be done with it. But holding a couple hundred shares overnight, I'm ready to go. Disney was the other one we took. Now here's where the 2 and the 5 minute candle pretty much lined up. So I had to wait. We got in. This candle, as soon as I got in, of course, it got bought back up. What are we buying? What are we shorting? The low of aftermarket. So, of course, I'm going to expect it to bounce. Profit taking. But then here we in, the sellers came in again. But we ran into support at 96.30. I don't know where this came from. I really don't. And I'm sitting here and I'm trying to figure out, well, why is this thing stuck here? I go back to my linear regression channel. What's this price? 96.30. What's the low price? 96.30. The freaking linear regression channel, the algos or whoever's sitting there at 96.30 is what held this thing, and it didn't go anywhere. But we never did recover. So I had a choice. I could have taken this off and locked in the profit, which is about $1, or look for it to fade tomorrow. Look for, when the market opens, this adjusts. Look for it to fade. Get down around 90. So that only made sense to me. So now I've got, 2 trades overnight. Disney is a full position, and this looks really good. I mean, you look at it. The chart is telling me this is likely to sell out. Now, I don't know what's going to happen overnight. Something can happen. The market can bounce, and it hurts this. That's a chance you take. This is trading. That's a chance you take. But I'm looking at the setup. I'm looking at the fact that, hey, I've got a really good opportunity to, to make this happen. So that's what I'm going to be holding on for tomorrow. So everything that I've showed you, this is how I have adapted to the changing market conditions for trading earnings. One, I've shortened up and I've started using the 2-minute chart, which is working pretty good. When it lines up with the 5, then I'll trade off the 5. And we do get smaller moves, but I am prepared to hold these overnight, because these charts, if you look at the technical analysis and the chart is telling you that, hey, I'm holding support or I'm holding under resistance, then I know I've got a good opportunity of locking in more profit the next day. And that's it. I know it's a long explanation, but I wanted you to understand, step by step, my thought process. So it's late. We're gonna shut it down. It's like 12:15, and I will be back at this thing first thing in the morning. So be safe. Have a good night, and I'll see you in the jungle.